Hello and a warm welcome to this week's video update. My name's Scott and this is episode 29 now of the market update. I'll take you through what's happened over the last week, what changes we've seen in the markets, and a quick look forward into this week and what we can expect to be the key drivers of the market. So we look firstly at gas prices. Slight increase week to week really, just shy of 5%. So we have seen prices holding steady for about half a month or so. We are starting to see a slight uptick in prices there. So that's something to keep an eye on. So maybe a change in momentum there. Power is definitely more notable. So while we're seeing prices gradually increase on gas, power is a bit more noticeable. And we can see over the last couple of weeks or so, prices have begun to increase at a much more steady rate. So again, a change and a shift in the dynamic there. Much of that is due to weather conditions changing and forecasts changing, but we'll get onto that. But yeah, definitely a change in momentum in power prices, more so. And then a quick look at day-ahead market. So last week we noted a massive spike in day-ahead prices. What's happened this week and part of last week is prices have consolidated really after that initial spike. So you'll see on the right hand side of that graph there, prices are slightly declining, if not holding steady at that new range. So it'll be interesting to see where we go from here. Looking at previous spikes, I guess you could say on the graph, most of them are very short-lived. So we wouldn't expect prices to hold steady for too long. So yeah, that may change over this week and next potentially, but for now, prices are holding steady at that 300 to mid 300 range. So what happened last week? So last week we saw a number of things happen on the fundamental side more so. So the French nuclear restart did see a delay. So EDF did send out a notice that we pushed back. Most of the pushback was only for a week, so we're not talking a significant delay here, but I guess from a sentimental point of view, the market's seeing those reactors continually get pushed back. It doesn't instill a lot of confidence in the infrastructure coming online as promptly and as on schedule as planned. So that did cause some bullish momentum, and that's partly why power prices have increased more so than gas last week. Next is Freeport did announce that they'll be resuming at 80% capacity in mid-December. Now there is a further update on that, but as of last week, that was the latest update. So that did boost LNG supply outlooks for 2023, helping to ease gas prices. And then just a couple of days ago on Sunday, OPEC Plus did meet to discuss production levels. Now there was speculation that they could well cut supply given the decline in market value of oil over the last month. But it was decided to keep production levels where they were. So that decision was slightly bullish on oil perhaps. So it did rebound from low 80s to mid 80s on Brent, but a decision not to do anything had a minimal kind of impact there. So we'll wait and see the next OPEC meeting, which will be next calendar year, most likely now. So looking at this week, as mentioned, we have another update from Freeport. So the story continues with this LNG terminal. It's now expected to return at the end of the year. So that's a change from mid-month. And it's only expected to partially return. I don't have figures on percentage, but I don't think that's going to be as high as 80% anymore. So that is a bullish kind of news. The market hasn't reacted as bullishly as I would have expected it to. Perhaps just a half month delay there is perhaps not as significant as the market would react to. So that's one to keep an eye on, but fingers crossed that Freeport finally kind of becomes operational end of December and helps with the Q1 period next year. Next, I'm sure you've seen on the news quite a lot. There is quite a big cold spell coming soon. As of about Wednesday evening, for about a week, temperatures are going to kind of plunge across Europe and the UK. be as low as -9 in Central Europe, as low as -9 in parts of Scotland as well overnight. So temperatures are going to get very cold. The Met Office have sent out an amber cold weather alert as well. So yeah, it's going to test the markets. It's going to test our supply. It'll be the first big test this winter, and we'll see how we get through it really. It's not all doom and gloom. Supply is looking very strong for the UK. We have about 12 LNG cargoes laden, ready to go, kind of to help get us through this period. So we'll see how well we get through it, and if we get through the other side in a good condition or not. That could set the trend for the rest of the month where prices go. And then finally, last week we saw the G7 come together to cap Russian oil, that's seabound, to $60 a barrel. That is taking effect this week. It took effect on the 5th, so yesterday. We'll see what kind of impact this has on wider oil and energy prices. It does remain to be seen. Of course, this is only impacting seaborne Russian oil, not piped, and it is only the G7 countries that are imposing this cap, so it's not a global cap as such. So hard to say what impact that will have really on the wider energy mix, but it's something to keep an eye on, and something that was implemented this week. That's it for today. If you'd like any further updates, as always, we have our website where you can read daily and monthly reports. The latest monthly report will be scheduled for release soon, as we're in December, so keep an eye out for that. And you have the Market Watch live team as well, which you can chat to between 10 and 12. So thank you for watching. I'll see you next week for next week's update. Thank you.